Welcome to Life Insurance Exam Preparation. This is part 4 of 4-hour complete life insurance exam masterclass. In this chapter, we'll explore the concept of policy replacement and the special considerations that come into play when an insurance agent is involved in replacing an existing life insurance policy with a new one policy. Replacement is a process that should not be taken lightly as it can have significant financial and coverage implications for the client. Understanding the rules and regulations governing replacement as well as recognizing the factors that could make replacement necessary is crucial for both passing the exam and ensuring that you act in the best interest of your clients. Let's begin by discussing why clients might consider replacing their life insurance policy in the first place. There are several reasons why someone might decide to replace their existing policy with a new one. One of the most common reasons is the desire for better coverage as a person's life circumstances change, such as getting married, having children, or purchasing a home. They may find that their current policy no longer provides the amount of coverage they need. This could lead them to seek a new policy with higher limits or more comprehensive benefits. Another reason clients might replace a policy is to obtain lower premiums if a policyholder's health has improved since the original policy was issued, or if they find a policy with a more competitive rate, they may be inclined to replace their existing coverage. This is especially common when clients outgrow term life policies and are seeking permanent coverage with a lower premium or better long-term benefits. Sometimes clients may choose to replace their policies in pursuit of investment growth. Permanent life insurance policies such as whole life or universal life can accumulate cash value over time. However, the growth rate of this cash value can vary significantly between policies. If a policyholder is dissatisfied with the rate of return on their current policy, they might consider replacing it with a policy that has a higher potential for cash value accumulation or different structure that better aligns with their financial goals. However, despite these reasons for replacement, it's important to recognize that replacing a policy is not always the best solution. Replacing an existing policy could come with certain risks or downsides that clients may not fully understand. For example, when a policy is replaced, any accumulated cash value in the old policy may be forfeited, which could be a significant financial loss. If the new policy has a different structure or benefits, the client might also find that it doesn't provide the same level of coverage as the original policy. Additionally, if the client is older or their health has declined, they may face higher premiums on the new policy, which could make it less affordable in the long run. This is where the role of the insurance agent becomes especially important. As an agent, you are responsible for ensuring that the replacement is in the client's best interest. You should conduct a thorough needs analysis to determine if replacing the policy is truly the best option or if the client might be better off keeping their existing coverage. This includes reviewing their current policy's features, the premiums, the coverage amount, and the potential loss of any accumulated cash value. When it comes to the legal requirements surrounding policy replacement, there are specific rules that agents must follow. One of the key requirements is the notice of replacement. If you are involved in replacing a policy, you must provide the client with a written notice that explains the replacement and its potential consequences. This notice should detail the financial impact, such as any surrender charges, loss of cash value, or the introduction of new contestability periods. The notice must also inform the client of the potential for higher premiums or different coverage features on the new policy. In addition to the notice, the agent must also complete a replacement form. This form requires you to disclose that a replacement is being made and provides the client with an opportunity to review and acknowledge the terms of the replacement. This form is critical for ensuring that the client is fully informed about what they are agreeing to when they replace a policy. It's also important to be aware of the risks associated with unethical practices in policy replacement. The practices of churning and twisting are prohibited by law and can result in severe penalties, including the loss of your insurance license. Churning occurs when an agent convinces a client to replace a policy solely for the agent's financial benefit, often by using misrepresentation or by making false claims about the value of the new policy. Twisting is when an agent misleads a client about the benefits of a new policy, often by downplaying or hiding the drawbacks of the replacement. Both practices are considered unethical and are closely monitored by state insurance regulators. As an agent, it's essential to also be aware of state-specific regulations regarding policy replacement. Each state has its own set of rules and guidelines, and these may include specific waiting periods or restrictions on when and how replacement can occur. Some states may require that the client be provided with with a comparison of the old policy and the new one, highlighting key differences in premiums, benefits, and other features. Additionally, agents must consider the contestability period. When replacing policies, the contestability period is the time frame during which an insurance company can investigate and deny a claim due to misrepresentation or fraud in the application. When a new policy replaces an old one, the contestability period on the new policy typically starts from the beginning. This means that if the insurer dies during the contestability period, the insurer can review the application for inaccuracies or omissions that might result in a denied claim. It's also worth noting that some clients might seek policy replacement for special coverage needs, such as those related to high-risk professions, military service, or aviation. These individuals may require specialized policies that offer higher limits of coverage or certain exclusions based on the nature of their occupation or lifestyle. When dealing with these cases, it's important to ensure that the replacement policy provides adequate coverage for the client's unique situation. In conclusion, policy replacement is a significant decision for both the insurance agent and the client. As an agent, your responsibility is to guide your clients through this process with integrity and care by thoroughly evaluating their needs, explaining the potential consequences, and adhering to all legal and ethical requirements. You ensure that the client is making a well-informed decision that will benefit them in the long run. In the next chapter, we'll delve into special markets and niche insurance products, exploring how certain life insurance products are designed to meet the unique needs of specific groups of people, such as children, military personnel, or individuals with high-risk professions. In this chapter, we will explore some of the more specialized areas of life insurance that cater to specific markets or unique needs. While most life insurance products serve the general public, there are certain circumstances or professions where a more tailored approach is necessary. As an insurance agent, understanding these niche products is essential, especially when working with clients who might not fit the typical profile for life insurance or have unique requirements. By understanding these specialized products, you can offer better solutions for your clients and expand your expertise as a life insurance professional. One of the first areas we'll look at is juvenile life insurance. Juvenile policies are life insurance policies that are purchased for minors, typically by their parents or grandparents. These policies are often whole life policies, which means they come with a savings component that builds cash value over time. The appeal of juvenile life insurance lies in the fact that it locks in a child's insurability at an early age, regardless of any potential health issues that may arise later in life. By starting a policy when a child is young, the premiums tend to be lower and the policy can accumulate cash value that may be used for college expenses, a down payment on a home, or other financial needs in the future. However, juvenile life insurance isn't just about providing financial benefits later in life, it's also about offering peace of mind for the parents. If the child were to tragically pass away, the policy would provide a death benefit to help with funeral expenses and other costs associated with the loss. When selling juvenile life insurance, it's important to explain to the policyholder that the purpose of the policy is not just for financial protection but also as a long-term asset building tool. Next, let's move to guaranteed issue and simplified issue policies. These types of policies are often used by individuals who might not qualify for traditional life insurance due to their age or health conditions. In a guaranteed issue policy, the insurer guarantees acceptance regardless of the applicant's health status. There are typically no medical exams or health questions involved in the application process. While this makes the policy accessible to a broader group of people, it often comes with higher premiums and lower coverage amounts. Guaranteed issue life insurance is commonly used for people who may have been denied coverage by other insurers due to serious health conditions. On the other hand, simplified issue life insurance is a policy that still requires some basic health questions, but the underwriting process is much quicker and less invasive than traditional policies. These policies typically have a faster approval process, which appeals to people who need coverage quickly. While they still have some medical questions, they don't require a full medical exam like guaranteed issue policies. The coverage amounts may be lower and the premiums may be higher than standard policies, but they provide an option for individuals who might struggle to qualify for more traditional life insurance options. Another special market involves stranger-originated life insurance (STOLI) and investor-originated life insurance (IOLI). These are controversial and often illegal practices where investors purchase life life insurance policies on the lives of strangers, typically elderly individuals, with the intent to profit from the death benefit when the insured person passes away. In these cases, the investor is not the family member or the person taking out the policy, and they have no insurable interest in the life of the insured. These practices have been criticized for their ethical concerns, as they can lead to financial exploitation of vulnerable individuals. Many states have specific laws and regulations prohibiting STOLI and IOLI arrangements to protect consumers from being taken advantage of. In contrast, there are other niche insurance products for high-risk professions, certain occupations. Now that we've covered many important topics in life insurance, it's time to shift focus toward preparing for the life insurance exam itself. This chapter will provide you with key strategies and tips to help you approach the exam with confidence, manage your time effectively, and ensure you can recall the information you've studied. First, let's talk about reviewing key concepts and the commonly tested topics. The life insurance exam is designed to assess your knowledge across a broad range of subjects, and it's important to identify the areas that are most frequently tested. These topics typically include things like insurance basics, types of life insurance policies, policy provisions, underwriting, and regulations. As you prepare for the exam, make sure you spend extra time reviewing these core areas. One way to identify commonly tested topics is by reviewing study guides and practice exams, as they often highlight the areas that show up the most on the test. This doesn't mean you should ignore the other topics entirely, but it helps to focus on the most crucial ones so you can allocate your time and energy more effectively. Next, let's talk about how to decode tricky questions. Life insurance exams often feature questions that can be a bit complex or worded in ways that make them tricky to answer. One common trick is that questions may use negative phrasing, such as "which of the following is not," or "which of these is the exception." These questions require extra attention and careful reading. The key to handling these tricky questions is to slow down and really think about what's being asked. Read the question thoroughly and then carefully review the answer choices. If you don't immediately know the answer, try to eliminate any obviously wrong answers first. By doing this, you can increase your chances of selecting the correct answer, even if you're unsure about the specifics. Another important tip is to break down the question into its key components. For example, if the question asks about life insurance policy provisions, identify the specific provision being discussed in the question. Is it asking about the grace period, the incontestability clause, or the beneficiary designation? Knowing what specific concept the question is testing will help you narrow down your options and make the right choice. Practice questions are a great tool for familiarizing yourself with how questions are structured, and they can help you get used to this type of analytical thinking. When it comes to time management during the exam, it's crucial to pace yourself. The life insurance exam is time limited, and you want to ensure that you have enough time to answer all the questions without rushing at the end. As you go through the exam, aim to answer each question within a set amount of time, usually around 1 to 2 minutes per question, depending on its complexity. If you're stuck on a question, don't spend too much time trying to figure it out. Instead, mark it and move on, and then come back to it later if you have time. By not getting bogged down by a tough question, you'll prevent yourself from running out of time on easier ones. Taking practice exams is another essential part of your exam preparation. Practice exams help you become familiar with the format, the types of questions, and the time constraints of the actual test. After completing practice exams, review both your correct and incorrect answers. Understand why you got a question wrong and use that as an opportunity to reinforce your understanding of the material. By repeatedly testing yourself in a simulated exam environment, you will build both knowledge and confidence, which will be incredibly helpful on exam day. One common mistake many test takers make is assuming they can cram everything in the night before the exam. While last-minute review is fine for refreshing your memory, it's essential to have a solid foundation well before the exam date. Spread your study time out over weeks or months, allowing for plenty of repetition and review. Spacing your study sessions helps improve retention and ensures that the material stays fresh in your mind when you sit down for the exam. It's also important to remain calm and focused. Test anxiety is common, but you can manage it by breathing deeply and staying positive before starting the exam. Take a few minutes to read through the instructions carefully. Make sure you understand how many questions are on the test, the time limit, and the scoring system. Knowing what to expect will help you feel more in control and less anxious on the actual test day. Get a good night's sleep and eat a healthy meal beforehand. Arrive at the testing center early so that you can take a few moments to relax before you start. When you begin the test, read each question carefully and think about the material you've studied. Remember that you've prepared for this moment, and with the right mindset, you can tackle the questions effectively. Lastly, let's touch on what to expect on exam day. When you arrive at the test center, you'll likely need to present identification and check in. The exam may be computer based or paper based depending on your location, but either way, you will be given specific instructions on how to navigate the test. Some exams are multiple choice, while others may include true or false or fill in the blank questions. Whatever the format, be prepared for a wide range of question types. Take on read each question carefully and manage your time wisely. Once you finish the exam, you'll typically receive your results immediately or within a few days depending on the testing center. If you pass, congratulations, you've earned your life insurance license and are ready to start helping clients secure their futures. If you don't pass, don't be discouraged. Many people don't pass on their first attempt, and you can always retake the exam after reviewing the areas that need improvement. To wrap up, preparing for the life insurance exam is a process that requires hours, dedication, time management, and strategic studying. By focusing on key topics, practicing with sample questions, staying calm, and pacing yourself during the test, you'll be setting yourself up for success. Best of luck as you move forward in your exam preparation and toward earning your life insurance license. As we reach the conclusion of our life insurance exam masterclass, let's take a moment to reflect on everything we've covered. You've learned a lot over the course of this training, and now it's time to solidify the key concepts and strategies that will help you succeed on the exam and in your career as a licensed life insurance agent. First, we discussed the insurance basics, how insurance works, the concept of transferring risk, and the role of insurance in creating financial security. You now understand the important terminology and concepts such as premium, policyholder, and beneficiary, along with the law of large numbers and the importance of insurable interest. We then moved into types of life insurance policies, from term life insurance to whole life, universal life, and variable life insurance. You've learned the differences between renewable, convertible, and traditional policies and how each of these products serves different needs. We also explored specialized policies like survivorship and joint life insurance, as well as final expense and credit life insurance, which are more tailored to specific situations and policy provisions, options, and riders. You learned about the mandatory and optional provisions in a policy, such as the free look period, grace period, and the incontestability clause. You also discovered the benefits of policy riders like waiver of premium and accelerated benefits that offer additional flexibility and coverage in specific circumstances. We then explored insurance contract law, helping you understand what makes an insurance contract legally binding. You learned about important contract elements like offer, acceptance, and consideration, and you now know the difference between unilateral and bilateral contracts, as well as the significance of representations and warranties. We also discussed fraud, misrepresentation, and concealment, and how these factors can affect the validity of a policy. Underwriting and risk classification came next, where you gained insight into the underwriting process and how insurance companies assess risk. You learned about medical and non-medical underwriting risk classifications and how factors like health, lifestyle, and occupation impact premiums. You now understand the role of the Medical Information Bureau and how consumer reports can influence underwriting decisions. When we covered life insurance premiums and costs, you learned about the different factors that influence premium rates, including age, gender, and health. You're now familiar with the different premium structures, such as level, grade, and flexible premiums, and you understand the concept of mortality tables and how they factor into determining premium costs. The chapter on annuities and retirement planning introduced you to the different types of annuities, fixed, variable, and indexed, and how they can be used as part of a retirement strategy. You now understand the difference between immediate and deferred annuities, the accumulation and payout phases, and the tax implications of annuities in federal and state regulations. We reviewed the role of state insurance departments and the NAIC in setting standards. You've also learned about licensing requirements, producer responsibilities, and important consumer protection laws such as the GLBA and HIPAA that protect individuals' privacy and personal data. We then moved on to taxation of life insurance and annuities, where you learned how life insurance proceeds are generally tax-free, but the growth in cash value can have tax implications. We also explored the taxation of annuities and discussed the rules surrounding modified endowment contracts, MECS, and the 1035 exchange for policy replacements. Group life insurance and business uses gave you an understanding of employer-sponsored life insurance plans plans, including contributory and non-contributory plans. You learned about key person insurance and buy-sell agreements and how life insurance can play a role in business continuation planning. Additionally, we discussed tax advantages and employer contributions. The chapter on Social Security and government programs provided an overview of Social Security, survivor benefits, disability income protection, and Medicare and Medicaid. You now understand the basic concepts behind these programs and how they fit into the overall financial safety net and ethics and best practices for agents. You learn the importance of acting with integrity, adhering to fiduciary responsibilities, and following industry regulations. You also gained insight into fair practices, suitability in selling insurance products, and the importance of continuing education for professional development. Policy replacement and special considerations. Explain the rules surrounding replacing policies, highlighting the risks involved, such as the low cost of benefits or higher premiums. You learned about the agent's role in ensuring clients make informed decisions and the importance of understanding state-specific regulations. Finally, we discussed special markets and niche insurance products such as juvenile life insurance, guaranteed issue policies, and the unique needs of high-risk professions. We also covered important considerations for military and aviation personnel and the controversial topic of stranger-originated life insurance (STOLI). As you prepare for the exam itself, remember that the test will cover a wide range of topics, but by focusing on the core concepts we've discussed, you can approach the exam with confidence. Take practice exams to familiarize yourself with the question format and refine your test-taking strategies. Review your weakest areas and focus on those in the final days before for the exam. Now, as you get ready to take the life insurance exam, here are a few last-minute study tips. Focus on your weakest areas and make sure you understand key definitions, principles, and processes. Don't try to cram too much information in one sitting. Review the main points and test yourself. Get a good night's sleep before the exam and stay positive and calm. You've prepared well and you have the knowledge you need to succeed. Once you pass the exam, you'll be well on your way to starting your career as a licensed life insurance agent. But your learning doesn't stop there. The insurance industry is always evolving, so continuing education and staying up to date with regulations and new products will be key to your long-term success. Passing the life insurance exam is just the beginning. With the knowledge you've gained in this course, you're equipped to enter the industry with confidence. The key to success in this field is dedication to serving your clients, continuous learning, and applying the knowledge you've gained to help people protect their futures. Good luck, and remember, every step you take in your career helps create financial security and peace of mind for those who need it most. If you found this course helpful, make sure to like, follow, and subscribe to my Insurance Guide for more insurance topics. We're committed to bringing you the latest tips, strategies, and industry insights to help you succeed in your insurance career. Don't forget to hit the notification bell so you never miss an update, and feel free to leave any questions or comments below. Thanks for watching and good luck on your exam. This concludes this part of the masterclass. Review the concepts, test your knowledge, and continue to the next lesson.